Costco pant bars are still sold out. When they do go back in stock, they're gone in just a few hours. They're moving like hotcakes in a homeless shelter, and I have to show you why this is happening. First off, Costco is smart. This is a $260 billion corporation that stays ahead of the trends. 125 million members, yours truly included, paying $60 for an annual membership fee. That's $7.5 billion off of the membership fees alone. Hey, if you want to shop at our store, you have to pay us. That's great. That's genius. You gotta admit it. The fact that they are now selling Pamp Gold bars is no mistake. Do you really think that Costco doesn't see behind the lines on what's going on? Don't know what I'm talking about? Oh, I'm about to show you, and buckle up. And you don't think Costco has additional insider information to everything I'm about to lay out? Think again. And on another note, I know he's a little kooky these days, and a lot of people think he's crazy. I don't agree with a lot of the things he says, but Robert Kiyosaki's prediction of gold going to $75,000 per ounce might not actually be as far-fetched as a lot of people think. Before you start with the Robert Kiyosaki is a jackass comments and he's an idiot and all that, I want you to just listen to all of this I'm going to lay out. Then I want you to tell me if you still truly believe a $75,000 per ounce gold price is truly unattainable over the next 5 to 10 years. And I want you to actually comment and let me know what you think after you hear this. I really want to hear your thoughts. Let's start with the obvious, and then I want to dig deeper. It's no secret the Fed has very quickly raised interest rates to put the brakes on the economy after they flooded us with stimulus checks and jacked everything up. But look what happens every time interest rates get jacked up. Note the gray spots are recessions. Interest rates get jacked up, recession. Interest rates jacked up again, recession again. Jacked up again, recession again. Same trend over and over, and it's happening again right now. Not to mention, many people believe the Fed is trying to force us into a recession. And gold has a fantastic history in recessions. But hold on to your pants, Johnny. I'm not even close to done because this is just the beginning and this is the smallest of our issues. Let's go into Captain Obvious point number 2, national debt. Our US debt is almost $34 trillion. That's no big secret there. But if you understand how quick it's rising and how more and more is going to interest payments alone, the story gets bigger. And this is where things start to heat up a little bit, and maybe you start seeing a higher gold and silver price a little more clearly. Before the Fed was created in 1913, we had virtually no national debt. It was less than $3 billion at that point. Our national debt now is 1,100 times more than it was when the Fed was created. 1,100 times more in just 110 years. And no mistake, 99% of that came after we abandoned the gold standard in 1971. The worst part, $8 trillion has come in the last 4 years alone. This is called an exponential increase. People, we are in some serious and I'm still just getting started. 16% of our expenses are going to interest payments alone. That's almost $1 trillion a year we are paying in interest. We are spending more on interest payments than on health. But here's the worst news. Interest payments are predicted to go from our third highest expense to our highest expense within just a couple more years. That means over 1/4 of our tax money is going to be used just to pay interest. And it's only going to keep going higher until everything finally crashes and a reset happens. Look, I'm not Mr. Doom and Gloom, but let's be frank, we are not only do we have nowhere to really cut our cost, they're already too high, but with interest payments just continuing to grow, we have less and less wiggle room to do so. And by the way, if you weren't already aware, it's not just our national debt that's in trouble, our private debt is in pretty damn bad shape too. Credit card debt is at all-time highs. We recently just actually hit over $1 trillion in credit card debt for the first time ever. Need some more? Sure. Check this out. People are actually dipping into their retirement assets at record levels, like way beyond record levels. Just look how big this dip is we are currently going through. The last dip we saw that was even close to this size was in 2008 during the recession, and this one is even bigger. And same trend, large dips where people are dipping into retirement savings results in recessions. And unless you've been living under a rock lately, you already know the housing market is pretty much at a standstill right now. No one really wants to sell their houses because of the low interest rates they got during the last 10 years, and no one wants to buy with the higher interest rates we currently have. And if we take a look at the 30-year fixed rate mortgage averages, measured in percent change from a year ago, you can see the biggest change we have ever seen by far. Notice what happened after the big changes before. Recessions, once again. And this change now is more than 4 times more any of the previous ones. That is scary. But it's not just the private sector here either. The commercial real estate industry is one of the largest influences on the entire economy, and it's in serious trouble. The average commercial real estate loan is between a 3 to 5 year lease. Well, guess what was 3 years ago? COVID, the thing that started people working from home more, a trend that continues, meaning less need for commercial real estate leases. $80 billion of commercial real estate property is in distress right now, which is a 10-year high. And with pre-pandemic leases continuing to expire, it's only going to get worse. Commercial real estate is a huge asset class. It directly and indirectly creates an enormous amount of jobs. It's closely tied to the banking and finance sectors through property loans, mortgages, and investments. It's a very critical component of many investment portfolios and pension funds. Also, this results in severe losses for property taxes, which means even less spending money that we already don't have. And of course, this all has rippling effects on all of the other industries like construction, interior design, real estate services, and everything that goes along with that. Because if people aren't renewing leases, we definitely won't be building more buildings. So on top of all that, we have multiple wars going on with tensions building. And next year is an election year? Look, this is like the perfect storm. And for everyone saying that gold can't go to $75,000, did you know gold 25x'd in the 1970s? It went from $35 to $850. And you're telling me with everything going on right now, gold can't 40x? Look, I'm not saying it will, but do you really not believe it could? Let me ask you a question. Have you studied the history of money? Do you truly understand the role and importance of precious metals throughout history? And I want to leave you with another fact. A fiat currency has never succeeded. There's a 100% failure rate. When this happens, precious metals skyrocket. Let's just take a real example in history here, the Roman Empire. In 301 AD, a pound of gold was worth 50,000 denarii. By the middle of the century, the price of gold had increased about 42,000 times. Yes, 42,000 times. This happened because the Romans debased their money, they ran into hyperinflation, and their fiat currency became worthless, making people flock to gold. It's a familiar story if you look at history. You want to hear one more stat? This is the first time in history that the whole world is on a fiat currency system. That system that has never worked before. Way to do your homework, leaders of the world. So when things start to fail this time, it's not just going to be one empire flocking to gold, it's going to be the whole world. Imagine what that would do to the price of gold. Do you still think a $75,000 price of gold is unattainable? Leave a comment. I want to know your true opinion on this. And can you now see why Costco gold bars are selling out so quickly? Costco picks up on trends very well. And people are starting to wake up. They're starting to sense the devaluation of the fiat currency around the world. Tell you what, it's about damn time, people. Check out the purchasing power of the US dollar since the Fed was created in 1913. A dollar was worth, well, a dollar back in 1913. That same $1 now is worth about 3 cents. So how about now? Still think it can happen? Look, our recommended precious dealers are in the description below. Not only do they have great prices, but they have great buyback programs, which is something you can't get from Costco, who is sold out anyways. Get a free kit from one of our recommended dealers and get educated. And hit that damn subscribe button. I want to have more conversations with you on topics like this. There's a lot going on you need to know about.